Okay, great to be back again. I'm Rajeev, managing partner at Orias Venture Partners, an early stage VC fund, 95 startups, 3 unicorns, 3 more on the way. The crypto world makes great promises, digital assets, which are literally incorruptible, a single global trading universe for every buyer and seller anywhere in the world, 24/7 by 365 trading. Why should we be limited to buying and selling from only 9 to 3? All built on a decentralized platform that allows nobody to take control. So why hasn't the finance community jumped all over it? Well, that's how Doug's Exchange and Dream started out. Doug Borthwick is behind INX. INX is the first fully regulated platform by the SEC, offering cryptocurrency, security tokens, and derivatives trading together in a platform. Kudos to you, Doug. You have come closest to belling the regulation cat so far. In fact, you're perhaps the one that's sort of doing the most of it here. Doug is a Wall Street veteran with 25 years of experience. He has held various positions in the financial and trading industry, starting off with Morgan Stanley, Merrill Lynch, Stanchart, exposure across emerging Latin American FX trading, et cetera, He has graduated from Carnegie Mellon and has an MBA from Yale. He's from Glasgow, the city with more green space per capita than any other city in Europe. So we folks in India are very envious of you, Doug, because green is something that we crave. India is already home to 100 million of the crypto community and perhaps the largest in the world. And Doug's ideas and thoughts, I thought, would fall on ready ears here. So here we are. I'm really looking forward to this. So I'm going to hand it over to Doug for about 20 to 30 minutes. Folks, you don't need to make any notes because we are happy to make this conversation and the slides available after. After this, we'll move to the Q&A. Please type your questions in the chat. We'll definitely get to them. I look forward to a productive 1 hour or so. Doug, over to you.
Rajeev, thank you very much. And wow, there's a lot of people in this room. It's great to be here in front of all of you. And thanks for having me. As Rajeev said, I'm Douglas Borthwick. I'm the Chief Business Officer for a company called the INX Digital Company. INX was thought of about in 2017. Now, 2017 was a very exciting year because, well, there was a lot of stuff happening with ICOs, initial coin offerings. Now, back then, I wasn't in the crypto space. Rather, I'd spent my career, as Rajeev says, working on Wall Street. I ran foreign exchange derivative trading at Morgan Stanley for about 10 years. I ran proprietary trading at a company called Merrill Lynch. I ran a Latin America business for Standard Chartered and actually spent some time in India. And also then went to a company called TPICAP, where I ran, I started a company called Chapter FX. It was the largest foreign exchange ECN at the time. Now, in 2017, ICOs were going on, and that's where people would set up a website, a couple of pages, what they call a white paper, and take money from people. They ended up raising around $25 billion from the general public all around the world. That's a lot of money. And with that capital, they said they were going to execute on different things, but in the end, most of them didn't. And it ended up being a lot of scams, and it was a bit of a disaster. Now, my CEO, a guy called Shai Datika, who spent about 30 years in the Israeli financial scene, saw all of this, the ICOs, and he said, look, something's wrong. This is a problem. The government's going to get upset with this. I'm going to go to the SEC because I want to do an ICO, but I want to do it the right way. The SEC looked at him and said, look, this isn't going to happen. You need to step away. We don't think so. And he came back with MWE, a law firm in New York, and a company called Ernst & Young, an accounting firm. And spent 950 days working with the SEC on the very first prospectus to do an IPO in the blockchain of a registered security. Now, what's a registered security? It's a security that has a prospectus. When you buy Amazon or you buy Nike or you buy any of these shares in the US or on a stock exchange, it's a publicly traded security that is public reporting, and it has a lot of standards. Now, traditionally, security tokens that existed before, but they were private securities. In the US, we call them Reg Ds or Reg Ss. Private securities, you only need really a page that discusses what's happening. They're restricted to, in the United States, accredited investors, wealthy people. And any foreigner can buy them, but that's because the SEC is there to protect, I guess, the US investor rather than investors outside the US. So we were the first to do this public offering. We ended up opening up a website after the SEC had declared our prospectus effective. And on that website, we then attracted 7,250 investors from 74 countries, and we raised around $85 million. Now, this had never been done before. It was a first of its kind. The average age of the investor was 42 years old, which I think surprised all of us. I even discussed this offering actually with your own Miss India, Pooja Batra, at one point over an Instagram discussion. So, I think that, there were some folks in India that were aware of what we were doing. With the money that we raised, we then started up a number of different businesses, because crypto isn't just crypto. In fact, if you think of the market cap of cryptocurrencies or blockchain assets today, it's something like $1.8 trillion. And it moves up and down. It was 3 trillion about 2.5 months ago. And then it was 1.5 trillion about a week and a half ago. And I think it's around 1.7, 1.8 today. Now, what was the market cap of equities? Oh, it's around 115 trillion. About fixed income, 130 trillion. So what you know of blockchain assets today is an absolute drop in the bucket. When Coinbase has a huge valuation of an IPO at 100 billion, maybe it's at 65 billion today, that's coming off of a market cap of the assets that they can trade of only $1.7 trillion. And just think of what the market cap is going to be for these types of companies that trade on the blockchain when there's 115 trillion or $250 trillion of assets that are trading on the blockchain. These numbers start to get a little bit mind-boggling. Now, in our conversations with the SEC, one of the big things that was pointed out was that, well, they liked the idea that when something trades on the blockchain, obviously ownership and truth is absolute. They also liked the idea that they could track and trace every single asset that trades on the blockchain. Today, if I have Nike stock, I could give it to Rajeev. Rajeev could sell it, and Nike doesn't know. The US government wouldn't know, and that could be declared as being money laundering. If it was a digital asset, well, the only way that I could sell it to Rajeev is if Rajeev had also gone through some sort of KYC AML, had whitelisted his wallet, and then the government would be able to go in there and map it. In fact, I think you saw yesterday that with Bitfinex, you saw a couple that was arrested in the United States for stealing $3.6 billion worth of Bitcoin a while back. And obviously the government managed to trace it back to the source, back to who took it. And this is the wonder of blockchain. I think that right now when folks talk about crypto in the press, mostly it's banks that turn around and say, oh no, this is what criminals use. Well, criminals like to use cash because it's untraceable. Bitcoin is absolutely traceable. You can trace it back to whoever's wallet it's gone to and wherever it's going. And this is one of the wonders of doing securities on the blockchain. Now, I think that you're all sitting here saying, okay, Douglas, this is interesting. It's, love to hear about your company, but that's not what we're here for. And so let me find you what we are here for. 1 second. Because I think what we are here for is really to talk about, I'm trying to find my share screen here. I think what you all want to hear is, what does regulation mean for India? Or what are folks talking about there? Now, INX at a glance, we decided to do a number of things as a company. Because crypto isn't just about crypto, it's not about that retail investor, it's also about institutional investors too. And given the vision that we have and the vision that the SEC has, we believe that you really have to access everyone from retail all the way to institutions. Retail today know very well the power of cryptocurrencies, and they're buying it up in storms. I read today about another cryptocurrency company in India that quickly amassed 10 million users. This is, and as Rajeev said, I think there's 100 million users of cryptocurrency right now in India. This is fast moving, but that's just retail. So we've got a retail cryptocurrency business, but we also have a broker dealer, an alternative trading system, an ATS, a transfer agent that can all allow retail folks and institutions to trade digital securities, just like the INX token. And then we also have something called an interdealer broker. Now you've got interdealer brokers in India, but most of you have never run into them. But when Goldman Sachs wants to do a trade with Merrill Lynch, it doesn't call them directly. It goes through an interdealer broker. So there's a feeling of anonymity when a trade is done. So we bought one of these. So now that we can offer cryptocurrency assets to banks directly. Now, banks in the United States, they want to trade Bitcoin. They've got high net worth, very wealthy individuals that want to have Bitcoin in their portfolios. But right now they have to send them away. They say, sorry, we can't accept Bitcoin on our balance sheet, but you could buy GBTC that trades on the exchange. And so they've come to us and they've said, look, create derivative instruments so we can create a yield curve. And we're creating things called non-deliverable forwards and options on Bitcoin. This way, the bank can hold a derivative of the underlying without actually holding the underlying. So now we're offering services everywhere from the retail investor that you're familiar with, all the way to the bank that wants to hold some sort of leverage or some sort of exposure to Bitcoin. And the way we've been able to do that is obviously by amassing licenses. Now in India, probably the most important thing you want to do today is start amassing licenses. Because it's always the folks that run out the door first that we all know. If you think about Binance in the United States or just globally, Binance decided on something called the Facebook model. The Facebook model in crypto is to break things, run out the door fast because you can fix it later. Now that can happen if you're in the media industry in the United States and maybe even in India, but it doesn't happen well when it comes to financial services. Because FINRA and the SEC doesn't like it if you break something, and sometimes they don't give you the opportunity to fix it. And so when you deal with strategic regulators in the United States, what you have to do is you've got to work very, very slowly. And you've got to make sure that every single person understands that what's important first is laying a foundation, as opposed to running out the door and getting business. Now, the same time that we went to the SEC to do our prospectus, Binance went live. Within a year, Binance was making, I think, $500 million, and INX was spending $3.5 million on legal fees working with the SEC. Now, people could say that was foolish of us. Maybe. But I can tell you this, it's very doubtful that BlackRock, American Express, Morgan Stanley, or HSBC will deal with someone that is based offshore like a Binance that is not regulated by any institution within the United States. And when it comes down to it, what do I want to do? Well, I want to deal with the BlackRocks of the world. I want to deal with the Morgan Stanleys of the world, because certainly I'm going to miss out on a lot of bad actors, a lot of folks that are out there, but it's the bad actors, that 5% that aren't doing any volume that's really meaningful. I can replace them with Fidelity or BlackRock as clients, and it makes them largely irrelevant. Now, there's lots of guys in this space, but I'm going to tell you about why capital markets are about to change in India and why it's going to be, I guess, interesting for you, and why going forward, Rajeev may turn around and say, you know what, I'm not interested in equity, I want security tokens. Because debt came out around 2000 BC, equity came out around 1602, based on our analysis, and security tokens just got started in 2020. Now, the SEC have deemed this a new asset class. So what does that mean? If you're a real money company in the US, real money means a mutual fund company. You're only allowed to invest in the things that are on your prospectus. On the prospectus, it says debt, equity, foreign exchange, and commodities. It doesn't say digital assets. And so all of these real money firms, in order to buy digital securities, have to change all their prospectuses. But not only that, they also have to change the way they go about doing business and their custody solutions. Because right now in the United States, the SEC and FINRA have not yet decided on what is a qualified custodian for digital securities. And this is important. In order for worldwide adoption of digital securities, the SEC and FINRA in the US has to turn around and say, look, this is what we call a qualified custodian, and these guys passed the tests, and they haven't yet. So Fidelity can be as a qualified custodian for digital assets like Bitcoin and Ethereum, but has not yet been deemed so for something like a digital security, like the INX security token. And for as long as real money firms can't hold a digital asset with a qualified custodian, they're not going to get into them. And for as long as real money companies can't hold a digital asset or don't list it on the front of their prospectuses, they're not going to buy them. And so what these companies have been waiting for is, I guess, President Biden and the SEC to come out with some further regulation regarding the custody of these assets and the taxation of these assets, which is something that we're expecting in the next 3 weeks. Now, India already got the ruling that came down a couple of weeks ago. And so you've got a lot more surety right now than I think in the US we do, but we certainly know that it's moving in the direction that we expect it to. And when things are about to move in a direction, but people are still wary, well, I think that that's probably the time to invest, because you know that the hockey stick's coming. You just have to figure out where that hockey stick is and what investments you can make to get into it. Now, I've got a slide here that talks about just the size of the growth opportunity for digital securities. Before we came along and did a full prospectus offering with the SEC for a digital security, the only people that could invest were accredited investors. Now, accredited investors in the US is a specific definition. It means people that make over $250,000 a year, or they have $1 million in assets. Now, you probably have a lot of friends like that, but when it comes down to the whole population, maybe it's the top 2% of the US population, and the rest of them are locked out. Now, given when you have a prospectus behind you and you make it into a full security, well, that opens up absolutely everyone around the world. So by doing what we did with our prospectus, we opened up around $40 trillion of investments. And that makes it into a much more interesting proposition, I think, for the world. Now, in the US, much as in India, there are probably specific players that deal in specific things in the crypto space. In the US, for crypto, we've got Coinbase and Binance. Binance is really offshore. Coinbase, though, is certainly the market leader for cryptocurrency. For digital securities or security tokens, there's T0 and Open Finance. For derivatives, there's a company called Bakkt. What makes INX unique is that we took all of these. I mean, we made sure we got the licenses for absolutely all of it. So while we can offer to retail, accredited investors, and institutional cryptocurrency, security tokens, and derivatives, the others can't. They're sort of pigeonholed in what they can offer folks based upon the regulations that they have. And we think that that's very important because it gives us what we call a competitive advantage. We weren't the first guy to the table. Coinbase was. Coinbase came out, they've amassed 75 million registered users. But there's only 7.5 million of these users that use it every day. Why? Oh, the UI is horrible. The customer service isn't there. There's a lot of reasons why, but in the end, people sign up for the very first crypto company they hear about, and Coinbase was the first, certainly in New York. And then they start to look, oh, look, there's a new cryptocurrency guy on the scene. Let me try that one out. Let me try the next one. Let me try the next one, until they find a UI UX that works and customer service that works. Perhaps the greatest Achilles heel in the United States for cryptocurrency trading businesses is customer service. And if you want to get into crypto, you've got to make sure your customer service is crack. Crack as in good. Because customer service is going to be that next level. Now, customer service sounds like you're going backwards in terms of, what are you offering folks? But there's only so much you can, I guess, automate. So there's automated client service, and then there's a phone call. The average age, as I said in my issuance, was 42 years old. If you actually want to get everyone in America or everyone in India to start doing cryptocurrency, you also have to look at the people over 35 years old that want to talk to someone on a phone. And I think that there is a move back when it comes to customer service, where we're going to see a lot of moves towards talking to an individual on the phone. I think that probably the fastest growing business in the US over the next 5 years is going to be client services at cryptocurrency exchanges to help in onboarding. It's not McDonald's anymore. It's not going to be Amazon workers in warehouses. It's going to be onboarding specialists at cryptocurrency exchanges around the world. I'd like to talk about the history of crypto, or certainly of and how it relates to what we've seen in history for a number of different asset classes. And India's just gone through this, where In the 1600s, that's kind of when equities came about. And then there's a whole blow up. And people said, you know what, forget about this equity stuff, until the London Stock Exchange was formed around 1773. 1792 kind of came back in again with a guy sitting under a tree down in New York. And you got the New York Stock Exchange. And then NASDAQ sort of modernized stuff. But crypto has been like this too. If you remember, 2017, there was this ICO campaign, this craze of ICOs, which reminds me a lot actually about NFTs. And then there was about $25 billion was raised, and then just disappeared. And then the market came in and said, the regulators came and said, look, this is a scam. You can't raise money from the individual public. You can't do all these things. You've got to do KYC and AML. You got to watch out for money laundering, and pretty much banned it all in 2018. In 2019, regulated trading platforms started to form. Coinbase realized that they could get money transmitter licenses for every single state, and they started going out there doing that. INEX went to the SEC and said, look, we've got to come out with some rules for this kind of thing. And in 2020, that's when really mass adoption started to really kick in. Now, here's where we are in India as well. The inception of crypto, the no regulation, the uncontrolled hype, the inevitable market failure and the collapse. And then the Indian government comes in and says, you know what, there's a future for this. And you're right at that bottom of that chart here, where you're about to see the adaption, mature growth, and commoditization. And this is the time for opportunity. Because with 100 million users of crypto, as I've been hearing, I think that Rajeev's told me this now about 10 times in our discussions, there's a huge opportunity for anyone that's listening to this to get involved in this space, really in any space whatsoever, because you've got digital securities, you've got cryptocurrencies to trade, and you've got all of the picks and shovels that go along with these business activities. When I think about a cryptocurrency exchange, it's not just about someone that's matching a buyer and a seller. There's also someone that's creating all the tax reporting for every single person that's trading on there. There's another business that's set up that's getting licensing for all of the different states or all of the different countries around the world. There's the legal aspect, making sure that you're following compliance correctly and that you're doing all the right things and keeping your paperwork up to date with the government. And then you move on to the folks that are trading. So you get people trading cryptocurrencies, people trading digital securities. Well, INEX, I think today is announcing that we're rolling out something where you can take Bitcoin, switches it into dollars. You can use the dollars to buy a digital security. And then after you've held the digital security, you can get back out of it, bypassing the fiat banking system altogether, allowing you to trade digital securities and move it back and forth between crypto and digital securities 24 hours a day, 7 days a week, even on weekends. This has never been done before in the US. I think we announced it later on today, but that's some exciting stuff, because before we did this, before we'd figured this out, the only way that you were able to trade a security on the weekend is if you already had a balance of fiat dollars sitting on our ATS, our I guess equivalent of an exchange. And so finding ways to allow people and build bridges between cryptocurrency and securities is definitely going to be the future. Perhaps the biggest opportunity that we're working with right now, and that you're going to find as well, is the ability to move currently listed assets that are trading on different exchanges and move them onto the blockchain. It's something that we call the Great Migration. Now, we've already announced that, there's a company came out called EV Biologics that announced in the press that they're going to delist from the OTC. They're going to drop their ticker symbol and list on the INEX trading platform. Now, why would they do this? Well, you can naked short stocks in the United States, but you can't naked short a security token because it's a self-custodial model. And naked shorting comes from when someone is able to rehypothecate an asset. Well, if you're self-storing it yourself in a MetaMask wallet or in any sort of wallet around the world, you're not lending it out to a hedge fund to be able to short against it. And we've identified of the 13,000 companies that trade on the OTC and elsewhere, we've already identified 225 companies that are going to be prime candidates to move over to the blockchain. But I'm not the only guy that's going to be telling you this, that everything's moving to the blockchain. The SEC commissioner, Clayton, last year in a speech in Philadelphia said in the next 3 to 5 years, all assets can move onto the blockchain. So that's all equities, all fixed income trading on the blockchain. So if you can build a company like INX that has the ability and the licenses to be able to take a currently listed equity, strip the equity out of it, do an equity for token swap, and then list it on a digital securities exchange, ATS, on the blockchain, well, that's a lot of business that's going to come your way, because that's a heck of a lot of, that's I think we said $115 trillion that has to move onto the blockchain just on the equity side, and about 140 trillion that has to migrate over on the fixed income side. And that we're not even talking yet about moving the currencies over. So there's a lot of business to be done and a lot of companies that are going to get formed over the next couple of years as people move into the blockchain. But you've got to remember that the blockchain and crypto is not just trading Bitcoin and Ethereum. There are so many other businesses attached to it that, I think that the key is, first, find out what you need in terms of licensing. Second, get the licenses before you start your business. 3, start the business. And then 4, make sure that the business you're starting has huge opportunity. And this is certainly something that has huge opportunity. Anyway, I think I've given you a taste of what INX is, of the regulators that we've talked to. We deal with money transmitter licenses throughout the United States. We deal with FinCEN, we deal with Treasury, we deal with FINRA and the SEC. We've spent a lot of time with all of the regulators. We think that that's probably key to the success for folks in the future. We certainly weren't the first guys out of the gate when it came down to getting into crypto, but Google wasn't the first out the gate when it came to browsers. I think I used Netscape for a long time when I was in college, and then Google came along and changed things. Cell phones, it wasn't always Nokia, or before that, I think it was StarTAC. I think there was always guys that came out the gate fast and now disappeared. So take your time, follow the regulations, and I'm happy to take questions right now that you may have specific to INX or specific to regulations or specific to how I see India progressing.
Thank you, Doug. I think that was a great primer. I think you spoke very eloquently about how the history of financial world has moved, and how everything is sort of history repeating itself in some senses. One of the things when you were talking, I was struck by, and this was something that I think we spoke briefly about in the past as well, is that this is the reason I got so fascinated by your story and INX's story is basically this is domain coming at it in the in this industry versus tech coming at it in the industry. Historically, if I look at all the crypto kind of exchanges and other things, it's basically a bunch of techies that got together, decided they needed to do something, and then jumped into it, right? Binance, Coinbase, etc., right? Whereas I'm seeing a different approach here, where it's not that you don't have tech jobs. You're an Israeli company. That means you got plenty of tech jobs, right? But you still come at it from a industry domain regulation perspective, and then try and hit this industry versus hitting it from the tech side of it. What does that mean? Can you sort of draw out a little bit more in terms of what that means in terms of evolution, how you think about the business or how you think about customers versus what a tech company would?
Yeah, well, I'll give a quick summarize on that. Shai Datika, our CEO, is in Israel, you're right, but we're an American company. Actually, now we're a Canadian company because our equity's listed in Canada on the NEO exchange. But when Shai had the idea, first he talked to blockchain guys. The earliest investors were Charlie Lee, who invented Litecoin, and Ricardo Spagni behind Monero. And so once he had the blockchain guys on his side, they went out and reached out to folks in the legacy space. Our chairman of our board was the vice chairman of NASDAQ, David Wieland. He's joined by Nick Thedany, who's the CEO of the Toronto Stock Exchange, and a guy called Tom Lewis, who's the CEO of Ameritrade, I think the largest retail trading platform in the US. It's an independent board. Then they brought on me with my experience at Morgan Stanley. My colleague in New York is a guy called Alan Silbert. You're probably familiar with his brother, Barry Silbert. He runs GBTC. You may even know my brother. He's the CFO of Bank of America. But the net of it is, we brought in guys that were kind of top of their game on both sides, the blockchain side and the traditional finance side. But we did it because the financial regulators aren't people to be messed with. And what I found is that tech entrepreneurs have no idea about what regulations are. They're excited, they can see the dollar signs, but they're the hares that run out the gate. And I think that it's more important to be the tortoise, because the longer term thinking, I guess for me, is ultimately I want my client to be BlackRock. I want my client to be Fidelity. I want my clients to be retail plus the largest institutions in the world. And I think that when you run out the gate and you see the dollar signs, well, first your clients are sort of the bad guys, and then your clients become, a smattering of good guys and bad guys, but you'll never get the larger financial institutions to trade with you because you don't have the right regulations. And if you don't have the right regulations, or you tripped up with the regulator and you paid a fine, well, you're automatically going to get blacklisted throughout the United States. And that's probably not where you want to be. You want to be on the side of the regulators if you want to deal with people. Now, most people in America, I'd say 95%, don't mind going through a KYC and an AML because it makes them feel more secure in their financial dealings. People feel a little bit weird if they open up an account somewhere and they're not asked for their driver's license, their utility bill. They feel like it's not actually a secure institution. And so you need to go through all of these different aspects. You need to get all the licenses in order to give that secure feeling, both to retail, but also to institutions. And the way that we came about it meant that we had a lot of, older sages that sat there and said, no, you can't rush into this business. You have to take your time. You've got to talk to the regulators. You've got to do that first. Now, when you see, let's say, FTX or other companies like that sitting in front of, or Coinbase sitting in front of the Senate in the United States, talking to senators, saying that they don't have any direction from the regulators, that's entirely untrue. INEX, our company, we've had lots of direction from regulators, but we didn't get our fingers caught in the cookie jar. In fact, Gensler, the SEC chairman now, mentioned himself that hundreds of the tokens that are trading on current crypto trading platforms, he sees as securities. Well, that's going to be a problem for them, because if they're listing securities on a cryptocurrency trading platform, but they don't have a securities license for digital assets, well, they're breaking the law. And for every single trade that's being done that they're listing it, that's going to be a problem. I can't open up a website and start trading Nike stock on it because I'm not an exchange. And so anyone just can't start trading securities for giggles. You actually need to have the right regulations. And so, there's a showdown coming for the early movers, the guys that ran out the gate fast. So that showdown is going to be with the SEC. They're building up significant reserves to defend themselves, and they're hiring every SEC lawyer that's ever worked at the SEC to defend themselves. We're coming at it from a different space where we never did that. In fact, we hired the head of New York's Department of Financial Services virtual currency division to actually decide what we end up listing as a digital security and what we list as a cryptocurrency. We've got very strict standards when it comes down to what we can list and how we list it, because I don't want to pay a multi-billion-dollar fine. One, I can't afford it, but two, it doesn't look good, and I'll lose any large customers that I want to have in the future.
Got it. Great answer. So let me ask you a slightly different question, Doug. Obviously, when we think about cryptocurrency, the name that comes to mind most immediately is basically Bitcoin. And then you delve in a little deeper, then you find Ethereum, Solana, and thousands of other coins. And then you start to, and it doesn't end there, unfortunately. Now there is NFT, there is stable coins, there's all kinds of new stuff that's happening. You've got, yield farming, et cetera, et cetera. So if I were to sort of have a framework for how to look at all the assets in this ecosystem, if I were to sort of, categorize it and say, if I had to think about this as a structured route, what would be the way you'd sort of, what would your framework be for how you would look at this entire world?
How do I look at the ecosystem? I look at the ecosystem where Bitcoin is the sun and everything else is moving around it. But look, I'm not a Bitcoin maximalist. but certainly I think that Bitcoin obviously is the trigger, and Bitcoin is the reserve currency for crypto in general. I think that Bitcoin is probably going to be the most important. I think that Bitcoin to me is a way for everyone to be able to hold, I guess, not everyone can buy real estate. Not everyone can buy a master's painting, but everyone wants to be able to save themselves from high inflation. Now let's look at, I think India is probably a good example. When you have high inflation, it doesn't really hurt those that are wealthier, it hurts those that are poor in the world, because they're on fixed paychecks and yet the prices are going up. Now, if you were to give someone a fractionalized piece of real estate or a fractionalized piece of a master's painting, or I guess just a fractionalized piece of Bitcoin, well, they've got a chance now to use that as a life raft. I think of Bitcoin as being a life raft, and I can take my wealth, I can put it into Bitcoin, and it's going to float along with inflation and cover me for that. And even, maybe even more so. Now, it feels risky because Bitcoin obviously has these huge downdrafts and then it moves back up again. But I certainly feel more confident about my assets being in Bitcoin than I do about them being in a bank account, especially when the US has printed 60% or something like this of the money supply in the last 9 months. So I put money in the bank, I get 0.25% interest, and then double the amount of money is in the financial sector by the time I take my money out. That doesn't make sense to me. I spent a career devaluing currencies at Morgan Stanley, whether it was in Latin America, Southeast Asia, or Iceland. Our job was to find weakness and to capitalize on that. And then when I started looking in 2013, 14, I always would think, well, everyone always buys the dollar for safety, but it's because it's the least of the dirty shirts, but they're all dirty. Every currency is dirty. They're all dirty shirts. And so, Bitcoin is the only way you can really devalue or save yourself from a devaluation of the dollar, because when you look at it, it's a mind trick. You look at it and say, well, the dollar hasn't weakened that much. It's strengthening against the euro, or, it's strengthening against the yen. Yeah, that's because the yen's also printing and the euro's also printing. So on a relative basis, though, they're all getting weaker. Now, how do you prove that something's getting weaker? Well, when I got out of undergrad back in 1992, I think that I was getting paid very high. It was $35,000 at Lehman Brothers for an analyst job, banking. I thought this is huge. Today for that same investment banker, maybe it's $250,000. Now, is the investment banker today almost 10 times smarter than me? No, it's because the value of the dollar has collapsed by that much. Or pieces of real estate. You're always told by your grandparents, you got to buy real estate. It's the best way to save, to make money. No, that's actually wrong. It's not the best way to make money. It's the best way to preserve your capital. The reason that an apartment in Manhattan, like a townhouse in Manhattan, cost maybe $5,000 to build in 1900, and today it's worth $28 million, isn't because real estate's gone up. It's because the value of the dollar has absolutely collapsed. And I see Bitcoin as being that one thing that I can buy right now that's fractional, that I can transport from country to country, that I can move around easily, as opposed to gold. And it's not just for me, it's for everyone, because of the fractional ownership ability. Now, Ethereum, I see that as my strategic oil reserve, in that I've got a lot of cars and gasoline moves up and down in prices all the time. And Ethereum I see is like gasoline. It's like gas that I put into my car. I know and I feel there's going to be a lot of trains traveling on these train tracks that are called Ethereum. And so I don't mind buying Ethereum on every dip, because I know it's going to get used. And if I can buy it cheap because I think it's going to be more expensive, then I buy it. So I look at Bitcoin and Ethereum in different ways. Bitcoin is sort of like, that's a wealth preserver. Ethereum is more of I'm buying a fuel that's going to be used in the future for finance. Now, there's lots of different chains that come out, right? There's Avalanche, which is a level 2 off of Ethereum. There's Algorand. There's many, many different chains that are thrown at me. I think I like Liquid. Many chains are thrown at me, but I don't know which one's going to end up being the train track of the future. And I'm not sure it's even relevant. When I used a cell phone, I don't care what cell tower it's using. I just care that my cell phone works. And I think that right now we're all in the weeds a little bit saying, well, is it on Liquids? Is it on the Bitcoin network? Is it on the Ethereum network? Is it on this Aave? And it's all kind of irrelevant. Like in the next 2 or 3 years, you'll have a smart contract that decides which chain to go on that's least congested, and it's going to be the cheapest. So a lot of the time, everyone's trying to pick, I guess it's like with VCRs. Well, should we use beta or VHS? And everyone's complaining about this, but you know what? In a couple of years' time, we come out with a DVD, and no one's even talking about VHS or beta anymore. Whereas the patents for VHS and beta may be very interesting. And think of Bitcoin as being the patent. So I'm not a turf war guy, but I do think that Bitcoin is the center of the universe, and I think that everything's floating around it.
Great. So let's talk about the vision for the future. I think you laid it out in the early stages of the presentation, where you spoke about the 120, trillion in capital markets and equity, and another 130 fixed capital, fixed income ecosystem, and those guys moving into the blockchain world, just like everything is going to move, is really going to be the future, and that's really where the future is. What does that mean, really? Does that mean how will I be trading in Apple? How will I be trading in these kinds of shares that I would now have a Ameritrade account or whatever right now? What would be the future? What is that? What is the change in behavior? What is the change that's going to happen to individuals that's going to be so exciting?
I'll tell you the feature that we've enabled with the INX token. The INX token doesn't close. There's no 9:30 in the morning till 4 o'clock at night. It trades 24 hours a day, 7 days a week, 365 days a year. You want to trade it in your time zone? No problem. You want to trade it fractionally? No problem. You only want to buy a certain amount of dollars worth of it? No problem. Can you do that today with Nike stock? No. You're limited between 9 o'clock and 4:30 in the afternoon. If you're in India, you want to trade US stocks, what do? I don't know, I guess you have to wake up at a certain time and trade them. That doesn't work. And let's say you don't have enough money to buy an Amazon share, and you're in India and you're a farm worker. You can't afford one Amazon share. Maybe you make that over the course of 3 weeks. So what do? Well, you can own it fractionally though. Well, okay, now you can build up a small portfolio, however small it is, but you can build it up fractionally. And I think that that's very important, because it means that you're democratizing wealth. Wealth today, let's say for US financial markets, is definitely for the wealthy. Now, people are forced into it through 401ks and retirement plans by their companies, but mostly it's for the wealthy. That's what equity markets are for, capital markets. If you can democratize that by meaning that you can have fractionalized ownership in different time zones for absolutely anyone, well, that's opening up a heck of a lot of people to improve their status or their wants in life. And I think that democratization of finance is very important. Now, another thing you'll find is for the issuer, if you issue a digital security, now you've got a much closer relationship with your investors. I know every single one of my token holders. I've got 8,700, I think, 8,800 token holders of INX. And I know exactly every one of them because I hold their KYC and the AML information for every single token holder. And I can go in on etherscan.io and type in INX space token, and I can see every single trade that's happening in my token. And if I see a buyer, I can click on that wallet and I can see exactly how much they've bought, when they've bought it, and I see the whole history of buys and sells in my token. This is very rich information, incredible data. Let's say I'm Nike today, though, and I say, I wonder who owns who are my shareholders. They've got no idea. They've got to go to the DTCC, who then says, well, Morgan Stanley holds your shareholders, and Morgan Stanley holds your shares on behalf of all of these different people. And you got to go to Morgan Stanley for that list. So Nike is very distant from their shareholders today. Not only that, if I want to pay a dividend, I pay it directly into the Ethereum wallet that someone's holding my token. And it's instantaneous, like that. There goes my distribution. And if I send $100 from me, it's $100 that goes into their wallet. When Nike sends $100 as a dividend, I don't know, maybe $97 gets into the wallet, because there's all these middlemen in between. You get the transfer agent, you get the commercial banks that take a piece. There's everyone that takes a little piece before it goes to the investor. It's not very efficient. So the issuer knows their cap table. The issuer can see, and everyone in the market can see, who's trading when, how, and what. Think of the days today where you have a hedge fund that's trading in the market anonymously through lots of different brokers, and they can amass 5% of a share without having to tell the management of that company. You can't do that in the blockchain space because every single transaction is being recorded on Etherscan, and you can see it. You can see when someone's creeping up on you, when someone's buying, when someone's amassing, and you see it in live time, not 2 weeks later when they do a filing with the SEC. So, you know, tremendous changes are happening, but also as an exchange, we onboard people directly. The New York Stock Exchange doesn't onboard people directly. Again, sorry, I'm not an exchange, I'm an ATS, alternative trading system, a platform, trading platform. The New York Stock Exchange doesn't onboard people directly. Instead, the New York Stock Exchange is linked to a broker-dealer, and the broker-dealer onboards someone directly. When you cut out that middleman of the broker-dealer and you onboard the client directly, well, fees go down. Before we came along, people were trading private securities in the digital space, and I think that the charge was 1 to 2% on either side when you bought or sold. 1 to 2%, we've collapsed that down to 20 basis points already, because you're not going to make something popular until the pricing becomes popular. And so, you know, there's significant changes that happen when a security starts trading on the blockchain. 24 hours a day becomes 7 days a week. You've got a much more international audience. The fractionalized ownership means you can spread out your ownership structure. But there's so much more. Let's say you've decided that you're an issuer and you want to do a digital security. You want to raise money. Well, let's say I'm in India and I've got 1 million followers on social media and I'm a brewery, let's say, but I want to raise capital. My choices are I could do equity, or I could do debt, or I could do this new thing called a security token. Now, for the security token, what I could do is I could say, look, we're not going to sell equity or debt. We're going to sell 40% of our profits in the future. And we're going to sell this, the rights to this, to all of our 1 million followers on social. So we're going to send them all a text or something and say, look, if you want to invest in this, come to this website and invest now. And they'll come because they believe in you, they trust you, they want to be a part of your business. And you can structure the payout in any way whatsoever, but they're not equity holders. They're not going to have a vote. You know, the people that are owners of the INX token, they don't own equity in INX. They own 40% of our profits in the future, should we have any. But security tokens allow you to take cash flows in the future that don't exist today and sell them to your followers and the people that believe in your vision and idea. So you can have cash today to invest in other projects or projects that you're interested in. This is phenomenal. This is truly using the power of your community as your bank. Think, you know, I've got guys that have come to me that have vaccines for different types of cancer. They didn't want to go to VCs or private equity because private equity and VC said, well, we want to take your equity, give us, you know, a whole bunch of equity if we give you $100 million, and also give us a board seat. Now, these guys with the vaccines, they need $100 million to get through the FDA process, so they get their drugs agreed on by the US or approved. Now, by the time approval happens in a year or 2 years' time, maybe they're not at the company anymore. They've been forced out by the VCs, and the VC now owns the IP. So, you know, that's a disaster for the founders. So instead, the founders come to me, they say, look, let's do a security token. We'll sell 30% of our profits that we get from if this ends up being a cure for cancer. And we'll raise $100 million from people that believe in it. And we'll do a media circuit. And, you know, we'll go out in the media, say we've got these cures for cancer. If you want to get invested, you can. People invest, and then they get a percentage of the profits. Would you invest in something like that? Absolutely. Cure for cancer, possibility of that, 20%, 30% of the profits if it happens? Sure. This way, the founders still own the IP. The founders still own all the equity, but they're giving up a future cash flow that doesn't exist today. And there's people out there that will buy that. So exciting ways you can do it. I'm working with a Premier League soccer team in the UK. You've probably heard of them. It's the company's called ALK Capital. They own Burnley. Burnley just drew against Manchester United yesterday. Fantastic game. Now, ALK Capital said, look, let's take some of these cash flows that Burnley has and we'll sell them to supporters. Maybe there's 600,000 people that follow them on social media. All their players have about 1 million followers. That's a lot of people that I can onboard onto my platform to buy the security. And now when the team wins a game, well, the supporters don't just get a pie and beans and maybe a beer after the match, but they also get a positive upside in terms of money in their pocket. And so taking communities, bringing them together, raising capital in whole new ways, this is what digital securities bring.
Fabulous.
These are the changes that are happening.
Fabulous, fabulous. Can I switch over a little bit to talk about why then, if this is so progressive and relevant, do you think that countries like China and Russia are kind of banning crypto? You know, what seems to be the thinking there? You know, any thoughts on that?
Well, I think in the America these days, if America believes in free speech, China doesn't. So generally, if China has something, then they ban it. The Americans normally think that that's a good thing. So, you know, I don't think America takes its lead from China based upon regulatory issues. Otherwise, we'd be, yeah, well, I'm not going to get into politics, but I think you understand that America doesn't look to China for leadership and direction. Now, Russia is not banning. Russia was, I guess, a little bit like India, in that it took the approach of, we're a little bit nervous about this. Let's just put it on the block. But then Putin came out about a week ago and said, look, you know, we want to go forward with this, find a way to make it work. So I think that one of the new Cold Wars is going to be who's got the most Bitcoin miners? Is it going to be Russia or is it going to be the United States? And China, for some reason, got out of it. But I can tell you why. Because China is certainly pushing their central bank digital currency. And it's probably one of the only countries in the world that can. Because a central bank digital currency, when used by retail and folks to do their transactions, well, now the government sees every single purchase and sale that you make. Now you've got to ask yourself, is that privacy? Would you like the government, Rajeev, to see every single thing that you buy with your cash? Maybe you would. I know I wouldn't. And I know most of the folks that are listening here like a little bit of privacy. And that's why we have cash. Right? You want, there's some purchases you don't want the government to know. Certainly, you maybe don't want your wife to know or your husband or whatever. There's a lot of purchases that people make where they like cash. In China, there is no such thing as right to privacy. And so a central bank digital currency makes a lot of sense. In the US, central bank digital currency has been brought up, and Yellen's, has been sort of pushing back on a little bit. Why? Because it was a right to privacy in the United States. And Americans will balk at the government seeing every single purchase they make or every sale. So what we'll probably have is a digital dollar, but it's only going to be used on the banking system. So banks up to the Federal Reserve level, as opposed to then drifting down, will have private blockchains or private digital currencies below, when it comes down to banks and individuals. And I think that that's exactly how we're going to see currencies happening in the US. But regulations in general, the US doesn't take its leadership from Russia and China, but I think that it'll embolden itself by China kicking out the Bitcoin miners. I've got to tell you, I've seen so many Bitcoin miners that are now coming to me to raise capital. They've secured the land in the United States. They've secured the power, renewable power in the United States. And now they're buying all these miners that are on boats coming out of China. They're buying them to set them up in the United States to go off. So governments, whether it's Russia or India, get nervous. That this could be a whole drain of capital out of our economy. They put the brakes on it. They figure out that it's going to be positive for their economy. They then turn around and come out with regulation, like you've seen in India, like you're seeing now in Russia. Once the regulation happens, it's like the Big Bang in London, right? That bang goes off, and now you better run and buy all the stores you can to offer shovels and picks to the guys that are going into this mine.
Let's stay on the CBDC ecosystem a little bit more, Doug, because I think I heard something interesting come out of what you were saying, which is essentially, you think that CBDC actually in the democratic economies of the world are not actually going to be with consumers because of the risk to privacy. Yeah, they're going to be more at the banking level. Is that what I'm hearing you say?
That's exactly what I said. So you'll have private chains like USDC. USDC is produced by Circle. And it's used by a lot of folks to do transactions right now. You can buy my tokens on my exchange with my ATS with USDC. And in general, transferring capital from one person to another in the US, I use USDC. It's very fast, efficient, and affordable. But USDC will probably be used from the banking sector down to the retail investor, the retail individual. And then from the banking sector, there's a lot of transactions that happen between the Fed and Chase Manhattan, between Chase and Bank of America. And all of these transactions right now are done through FedWire. And maybe you'll end up seeing that FedWire is replaced by a blockchain technology using a CBDC. And when you look at an SDR that trades at the World Bank, right? So all countries that are members of the World Bank have SDRs, special depository receipts, and they're made up of different currencies of yen, euro. It's like a basket of currencies. And what you'll find is the digital yen will be in there. You'll have digital dollars. You'll have, and so when the U.S. government gives a loan to El Salvador, gives a loan to India, or there's some sort of back and forth of payments, it'll be done using digital, central bank digital dollars, but these aren't going to be central bank digital dollars that you could transfer to Jon Snow that's walking around on the street. It's going to be used on the overall banking system on the header level as opposed to down in the meat of the story.
But don't you think, I mean, at this point in time, if I look at the USDC or Tether, these are the ones that are sort of the equivalent to the stable coins, not necessarily CBDCs, but nevertheless sort of represent them. Those are seen as on-ramp, off-ramp vehicles right now. So that's the way you sort of bridge between the crypto world and the, the fiat currency world of your banking ecosystems right now. So are you saying that that role sort of goes away in a world that goes entirely blockchain? I mean, that's the reason why you won't have those kinds of stable coin needs at all. Is that where you're going with this?
No. USDC is going to get used more and more. I don't see USDC pulling back at all. People are still going to get paid in fiat for quite some time. And USDC is used to take your fiat, move it into USDC. Now, why on earth, if I have a paycheck in the United States, would I keep it in fiat? I keep it at Bank of America or Chase and I get 0.25% of my bank account. And then you could say, well, but it's FDIC insured. Well, that's right for the first 250,000, but after that, it's not. Now, if I hold it in USDC today, or I hold it in G dollar over at Gemini, I get 8 to 10% yield on it. So why on earth would I hold it in fiat? And so USDC, I'd say, is less being used for transactions and much more being used as a staking instrument where you take your fiat, you take your paychecks, you switch them into USDC and you get 8 or 9% yield on it. That's fantastic. Fantastic. I mean, that's a God bless America. And so people are going to see that more and more in that, everyone that I know so many corporations in the United States that sit there saying, I need an extra 20 basis points on my cash balances. And you probably hear this, in India, where you've got, a treasurer with cash balances looking for to squeeze an extra 20 basis points. And when you tell them, you could just transfer this into USDC and make 800 basis points, it blows their mind. They feel like there's got to be a catch. There's no catch. In digital in the digital currency market, there are yield instruments that you can invest in that aren't FDIC insured, but then again, a lot of instruments aren't, with tremendous yields. And absolutely, that's the future of saving in the US. I can't imagine why you would save in a fiat bank account.
One interesting question that's emerged is basically around regulation itself. See, right now, we have a world of regulation that's very specific to the geography that you're doing the transaction in. So America being America, you will have regulation that is governed by the SEC. India would be, the equivalent would be SEBI, which is basically the same. SEC for India is called SEBI, that's it. Now, you are now thinking about a world where the buyer could be from anywhere, the seller could be from anywhere, and the transaction actually happens somewhere in the ether, in the cloud, as it were. So, what does that mean to regulation? I mean, is there going to be, like these, geography specific, geocentric regulators that will sort of continue to do this? If I were to sort of look at the crystal balls a little bit, in a world where everything has gone everything has gone blockchain and, everything is sitting in the cloud somewhere, how does this entire regulatory environment change? Do you think that continues to be the same way it is today?
Well, DeFi is going to move offshore. Now, what you'll find the next couple of weeks is probably that the US, DeFi today is primarily used by retail folks all around the world. And it's an anonymous person in one country dealing with an anonymous person somewhere else, and it can be a very profitable business. But there's institutions that want to get into DeFi as well. Fidelity wants to get into DeFi. The mutual companies everyone wants to get into DeFi. But if they're an institution, you can do DeFi if you're dealing with an anonymous counterparty. So the DeFi protocols, let's say Uniswap would be an example, are probably going to look at doing different types of pools. So there'll be the offshore pool where anyone is anonymous, and an onshore pool where everyone's gone through KYC AML through a broker dealer like someone like myself. And so we'll probably find that it's all down to, there's a break up of different pools. So maybe there's an India pool, maybe there's an India and China pool, maybe there's an India-Russia pool, maybe there's an India-US pool, but based upon different regulations, there's going to be different standards, and it's the pools that will change, but not necessarily how the DeFi units work. You know, MetaMask has a wallet right now, an institutional wallet that actually isn't really institutional, other than there's a slide on it that you says, look, I want 80% of this pool to have gone through KYC, or I want 90% or 100%. And you know, it's based upon how does your compliance sector want you to set it up. So I think that what's going to be found is that for DeFi, there's going to be a mandate for KYC AML. And if you're in the United States and you want to trade DeFi, you have to trade through that type of service. Why KYC AML? Well, again, to stop money laundering. And so the government knows that they can charge you taxes on whatever you're doing. So DeFi is going to change. These days of anonymous with anonymous all around the world, I think that may be the Wild West. Now, Americans that don't want to play in this sandpit will still be free to go offshore and do it, I'm sure. But I guess if they have a wallet that ends up being unregistered and there's money in it, then the US is probably going to look at that as being like a Swiss bank account. And unless you go out and you tell the tax man that, or you register it somewhere, the tax man can take a look. Unless you do that, then you could be in trouble with the authorities. So, you know, when you look at why are governments looking into all of this so aggressively, it's because governments like to make money. They like to charge taxes. And if you make money, it's not fair to them if you're not giving a piece to them. And the digital wallet is the ultimate Swiss bank account, where there's not even a bank that can tell you, hey, this is who owns it. And so you can't subpoena a wallet to give up the owner. That's the big problem that the government has right now. Now, once you register a wallet, you put it on a whitelist, you go through KYC, you go through AML, and you become a good person under the government's watch. Oh, then there's certain tax advantages that you'll get from that. And if you don't do that, well, just like the Swiss bank accounts, if you don't, tell the government that you have a Swiss bank account, well, then you can go to jail or you get a big fine. And I think that that's going to be sort of the strong arming that you'll see in the US, where they open up the whole space to whoever wants to trade it. That's no problem. Just make sure you register the wallets you're going to be using there.
Fabulous. Let me come back to this too good to be true 8-9%. Again, because obviously that warrants point by itself. Doug, this is one of the last couple of questions really. If I were to so in a world where the actual US dollar, in a 10-year treasury makes 1.8, 1.7% right now, right, as a yield, right? For some, dollar equivalent to actually get 8-9% sounds like it's too good to be true. And a part of that thinking, at least from the market explanation, is basically because of the insane amount of leverage that exists in that ecosystem, right? So 100x, 200x, 300x. So people are finding that staking and getting that leverage is the reason why the yield farming story is becoming so powerful and so on and so forth. What would you say to that? I mean, is that something that's sustainable? Is that 7-8% kind of number? Is that something that continues to remain?
Yield farming is 7 or 8%. Yield farming is giving you something like 89% a year. So there's different things. Yield farming, that's when you're jumping in and out of different protocols, and maybe you're making 87% a year. But yes, that has tremendous risk. But if you're actually putting your money into giving it directly to Circle or giving it directly to, let's say, Gemini, and they're paying you 8%, I don't see that as tremendous risk on a comparative basis to, let's say, yield farming. Now, why can they do this? When you give your money to a bank in India, how much do they pay you interest?
4%.
All right. If you have
less than a third
card,
of the, whatever.
If you have a credit card in India and you don't have a lot of money, what are you paying on your credit card for interest?
About 10 times that.
All right. So it seems that the bank right now is giving someone, let's say, 4% and they're charging someone else 30%. So isn't that a little bit like DeFi? It's that here's the difference. The bank's got bricks and mortar. The banks has compliance folks to get involved, and the bank's making a profit. In DeFi, you're putting your money up, and instead of that 30 or 40% going to the bank, it's going to you. You don't see that as a scam when it's the bank doing it, but when you go do it in DeFi and you take out that middleman, it's seen as being, this is scandalous. It's not scandalous. It's being done every day. In the United States, I'll get 0.25% if I put $1 million over at Bank of America or JP Morgan, but they're lending out money on a credit card at 15.5%. Do I get that 15.5%? No, I get 0.5% or 0.25%. Do I call this a scam? Well, it's a bit of a scam. I wish I got that 15%, but I'm not. But we're told, we've been conditioned to think that this is normal. We've been conditioned as investors to think that it's normal that I get 0.25% from the bank. But it's not normal to get 0.25% from the bank if they're lending it out at 15% to someone else. And so we need to break out of that thought process where we think anything above what the bank's offering me is a scam. You need to break out of that quickly and realize that actually maybe the bank's been just feeding you something and gaslighting you for the last 50 years, 100 years. You're being gaslit if you believe that your money is only worth 0.25% being held at JP Morgan when JP Morgan's lending it out thinking it's worth 15%.
I think, amen to that. I think gaslighting indeed, and that's a promise of DeFi right there, isn't it? The fact that you get rid of the middleman and hence you get rid of all the tyranny that comes along with having that middleman who's sort of, ruling roughshod over you. I think that's a fabulous, insight there. It has been a great hour and 10 minutes almost, Doug. So thank you so much. It has been very, very insightful. And I'm sure that we are looking forward to further such conversations with you, and hopefully at some point in time we'll get you over to India to sort of do the next round, and this time we'll try and time it so that you don't come during monsoon, so you don't have the knee-deep water that you had the last time you were in Mumbai. So we'll try and play that in terms of timing a little bit better. Thank you so much. Take care and stay safe, and appreciate the time that you've shared with us and the insights that you've given us. Really
thank you very much, Rajeev, and thank you everyone.